part of your portfolio, the largest part, should be in capturing these long-term trends. They're easy, you don't need to do anything. The trend is, like in crypto, is so powerful because the returns are so high. We've never had this before. The further you're out on the risk curve, the less likely it just accumulates over time, like Bitcoin does, which is the closest end of the risk curve, the least risky of crypto assets. So when you go that far out, they tend to be boom busts, and 1 out of 1,000, 100,000, 1 million actually scales to something much bigger. My mental model of I can make 100x and just come in a bit and say, can I make a 5x? Can I make a 10x? Now, in normal markets outside of crypto, that's monstrous returns. In crypto, that requires you to hold Bitcoin for 2 years or 3 years, or to find something in the top 20 that's moving, do it with 10% or less of your portfolio. And 90% or more, you put it in the highest quality names and let the trend work for you.
Raoul Pal urges investors to focus on long-term crypto trends instead of chasing short-term gains. He says most of a portfolio should be in top assets like Bitcoin and Ethereum, which steadily grow over time, while only a small portion should go into high-risk trade. Bitcoin, he notes, remains the safest and strongest performer in the crypto space. Pal believes we're entering a critical phase as global liquidity, debt, and adoption collide, a setup seen before every major Bitcoin surge. With central banks printing money again, he expects Bitcoin to lead, followed by Ethereum, calling this the greatest macro trade of all time. He predicts that Phase 3 of the banana zone will send crypto prices parabolic as institutional money floods in. Pal sees Bitcoin potentially reaching new all-time highs and says this cycle marks the start of a new financial era, not the end, but just the beginning.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Most other things we trade are cyclical. Okay, so let's say you've got a reasonably fast-moving asset that's proven and is towards the Bitcoin end of the risk curve. Then you know over time that your best bets are going to be to try and buy the dips and then flip them out when it makes new highs, because you've got the skew of the market's directionality. So I understand why you came for the 100x, and that's a statement about what you want out of your life. That's okay, but really you can make your life a lot easier if you truly are trading to make money. A lot of people actually just trade for the adrenaline. I've looked at this and said, okay, we've got these massive megatrends, crypto, technology. They go up over time. They're the fastest, crypto particularly is the fastest growing asset in terms of performance in all human history in the shortest period of time. Take that opportunity and use it, because if not, you're going to regret it. We've also got endless new markets because of crypto. 1 million tokens. You can trade a lot of things. Prediction markets, yes, they're highly correlated. So how fast will that capital start to come fully into this? Everyone's got time. There's no need to panic. But then you think about it. If you're betting on a human-to-human experience, there'll be ways of doing it, but you're not trading markets, you're trading different things. The other thing that we're seeing the rise of is the rise of the attention economy. This is what we're doing here, right? Yeah. It's attention. Attention is upstream of everything in humans. And so the attention economy, we've seen it with meme coins and other things. I think it's only just starting. All I know is we've got a period of time from here to then, it's got 2032, let's give that as the date, 2030, that we can figure some of this stuff out, because you'll see the changes happening faster and faster and faster. You know, all you need to do is say, listen, what you're doing there is you're taking away that probability of the long-term trend bailing you out. Right? If the number go up over time, this number does not go up over time. So therefore, say, okay, I understand what I did. I got too greedy with my mental model of I can make 100x. Like one of the tokens I was in last year, and sort of still, it's my main holding, is Sui. It's a big project that came out of Facebook. It's not a fly-by-night thing. I mean, that did 5 or 6x last year. Solana did it the year before that. So, okay, that's a lot easier. So then let's say you don't enjoy the time horizon that I do, which is actually doing nothing. Most people want to do something. And it's so hard for people to have a longer term time horizon. Because also when you go on crypto Twitter, which is where everybody hangs out, it's all about short-term trades, P&Ls. It's the top, it's the bottom, and all of that stuff. But then if you think about it, you just think, okay, so I've got this long-term trend. I'm going to put some of my capital into that. I would put 90% in, but you want to trade. I get it. So then put 50% of your capital in the long-term trend. So that's your long-term book. Leave it aside. You got your punting book, which is 10%. The middle, you say, okay, I want to swing trade. So what you can do is then say, well, if the market is skewed in an upward direction, then I'm going to buy dips and then flip out and look for the highs. Never short the highs. Why would you short the highs in the fastest appreciating asset of all time? So then now you've got a system that is simple to explain to yourself. And then whatever indicators of using technicals you want to use, whether it's oversold RSIs or whatever indicators you use, it's really simple because you have one thesis that this thing's going to trend over time. You've got your long-term book, you've got your short-term punting book, and the middle you can swing trade and try and capture the trend. So when I talk about a long-term trend, well, the probability of it going up tomorrow versus today is higher, which is much better than if you're trading a short-term chart, which could be moving around. So your probability goes up. That's all it is. And you have to understand that the probability of trading is, most of the best traders in a shorter term time horizon will be at best 50-something%. Analyze the trend, how long is it going to last, and choose the best asset. Because they're all being driven by this one dominant macro factor. And this is the key to everything I'm doing right now. As I said, I used to run these broad diversified portfolios, hedge fund portfolios, which is I found out that the printing of money to pay for the debt that's been accumulating, they've had to print money and that debases the currency. So that means there's more and more currency every month or whatever. And what that actually means is the value of the purchasing power of the currency goes down versus scarce assets, equities, crypto, housing, all of that stuff. That's the kind of dominant factor. But it's so dominant that it explains 97.5% of all the movements in the NASDAQ over the last 12 years and 90% of Bitcoin. So you've got the single most dominant factor in the history of markets at play. So you only have to look at one thing, really. The rest is noise.
Raoul Pal urges investors to focus on long-term crypto trends, keeping most of their portfolio in strong assets like Bitcoin and Ethereum instead of chasing short-term gains. Bitcoin, he says, remains the safest and most reliable asset for steady growth. Pal believes we're entering the next explosive phase as liquidity, debt, and adoption collide. With global money printing and institutional capital flowing in, he calls this the greatest macro trade of all time, the true beginning of a new financial era.
So we've got these megatrends. We've been debasing currency, printing money to kind of offset this massive debt because of the aging population that's slowing growth, and the governments try and keep growth up by creating debt. Are they printing more currency? And therefore it makes all the numbers go up, except really cyclical stuff, oil and stuff like that. But generally speaking, it does that. So then if everything is being dominated by this one macro variable, then all you need to do is, what is the fastest horse? And how I do that is I divide one asset by another. So I'm looking for what's going to outperform Bitcoin, because that's the benchmark asset. And that's what got me into Solana in 2022, 23. The chart pattern looked like it was going to base, and there was a good chance that was going to work. And then my switch from Solana to Sui, that did the same thing. If everything's being driven by the same thing, by the fastest thing, that's not too far out the risk curve. That's it. And so you don't have it's going to go to zero risk with those assets because they're proven large assets. And that's the best way of capturing it. So that's all I've done. So since 2022, I've made 2 asset allocations, which is a switch into Solana at the lows, and then out of Solana into Sui. And that's it. And I've also do a bit of the punting for the fun, because your friends you're seeing on crypto Twitter all day. I looked at every single one of those kind of highly speculative bets. They all lost money. Every single one. Some of them went to zero. The rest of the book, amazing. Now, the issue is most people don't start with any capital. That's the hard thing. And so that's why everybody looks for the 100x, because they don't have any capital to start with, because people's wages are not high enough compared to the cost of living. I totally get that. And then that forces you to go out the risk curve to get any capital. I understand it. But if you do get any capital together, I'd rather you did a second job and put that money into trading than just go out too far on the risk curve
Yeah.
and miss the opportunity set. Because the opportunity set is the longer term thing. So if you've got a second job or a third job, do whatever you can using your skill set where you can make a bit of extra money, stick that into your investing book. You'll get it over time. But if you keep trying to get the 100x, you'll never get past the I'm paying my bills at the end of the month idea. And I know that is the hardest thing, starting from nothing, getting somewhere. It is really, really hard. In crypto markets, the other risk that you're going to go down is you're going to use leverage because it's so available. It's so available and it's much easier than trading futures. It's just so there. You can use it intelligently. So maybe you juice your returns, but I'm talking about 2x or 3x leverage and not 20x, 50x, 100x, because that's back down here where the probability of losing all of your money is about 90% or 95%. Another way of approaching it is forget crypto. The other thing that we've seen a huge move in the US towards, same generation, is stock options. You have a defined risk reward. You've got globally knowable, understandable group of companies that are moving fast because of the technology bit, and you've got a defined risk reward. And they're trending. So now you're looking for acceleration points if you're buying calls. Okay, maybe that's an easier way to get that capital a bit faster, because you're not here with the stuff just goes to zero all the time because there's no trend. You're buying Tesla, let's say, call options, and what you're trying to do is use your trading methodology to look, will it accelerate beyond the strike price of this option versus what I pay for it? Okay, that's interesting. And Robinhood makes it so easy, and you can do it in small size, and you can make some big returns. So now you're not trading something speculative, you're just now betting on time horizon and price. It's hard. Options are no free money.
Yes.
They're really hard, but it's a good place to start because you can stick your $100 in to a call option on something. You'll learn a lot from it. And it suits a shorter term time horizon. But if your time horizon is like you're a day trader, well, a 1 month option is like a long term bet for you. It kind of teaches you also to think about different time horizons.
Raoul Pal emphasizes that the key to success in crypto lies in following long-term trends rather than chasing quick profit. He believes investors should focus on high-quality assets like Bitcoin and Ethereum, which consistently build value over time. As global liquidity expands and adoption accelerates, Pal expects this cycle to trigger massive growth across digital assets, calling it the greatest macro trade of all time. He predicts that the coming months will mark the start of Phase 3 of the banana zone, where institutional capital and renewed liquidity could send crypto prices soaring. According to Pal, this isn't the end of the cycle, it's just the beginning of a new financial era. Do you think Bitcoin will lead the next big crypto rally? How are you positioning your portfolio for the next phase of this cycle? Share your thoughts in the comments.